Right, ledgers. Can everybody hear me? And can you see should be able to see Bitcoin Prime XBT website? Let me know and we'll begin. Hope you all had a good weekend. Sorry about the delay. Monday I couldn't do, and then David wasn't available Tuesday, so Wednesday it is. Works out better. Okay, so I'll do my bit and then bring David on. Okay, so let's get the necessities out the way with. So welcome once again to Bitcoin for Ledger's weekly live stream. Before we start off, just a big shout out to our sponsor, Prime XBT. They're our partners. So if you use the link in the description, you can get up to 7,000 USD deposit bonus on your trading bonus on your deposit, whatever. So use the link. It supports the stream, supports Prime. And as always, nothing discussed or featured today constitutes financial advice. As with all areas of investment, you should always seek the advice of investment professional before parting with your capital. Get that stuff out the way with. How's everybody? Like the video, share it, this, that, the other. So I'm going to get straight to my point. I'm not going to fuck about too much. And what I think of the market. So, let's start off with the bigger picture. New month, what's going on? Has my bigger picture changed? Not really, okay? I still think bigger picture, at least take out these lows. So we've got monthly range high, whatever you want to go draw these range lows, these lows here. So I still think we take out that. I think Bitcoin fulfilled its monthly range, okay? Hi TraderSZ. Early in January, so this part was just probably a pricing in the wick consolidation part. Okay, so until proven otherwise, I believe we go here. I will mark out scenarios as to where I think, okay, maybe it's a higher low, or even if it's not a higher low and there's a deeper pullback, where can we play possible bullish level to level plays? Level to level plays probably makes it easier. You don't have to have a bias, just whatever the market's telling you. So let's go to the weekly, and as you can see, so it's got down consolidation, up candle, down, up candle, down, up candle. Taken on last week's high. I would anticipate these to be taken. So from a simple SR point of view, you can see, maybe like this, probably better. Still in the bottom area. And if it does flip above here, so if it gets above here and holds, then I'll say, okay, maybe a deviation. And doesn't necessarily mean, down moves over, but it could be a low in, and I'll mark out scenarios for upside targets and longs. Okay. So, these SR levels basically map that out, and you can see the range. I've had these charts for like months now, so I've been watching the streams, so it naturally makes sense to come towards here. Does it necessarily have to touch that? Not necessarily, but we'll mark that out anyway. So, having said that, the next chart we mapped out, so that's just basic SR. The next chart we spoke about was using yearly range. So last year's high, 2021 low, 2021 high, 2021 mid-range, and then break that into a half, and we're at the midpoint between the mid-range and 2021 low, which is the key pivot for now. So we're going to be using that, and I'm going to get straight to the point with the setups, because a lot of it is going to be a bit of a repeat because we've just been in a range. So what are the scenarios? I personally think, if correct, probably high of the week is in. If not, then I'm going to be marking out long setups. So let's go down to the lower time frame, and what have we really done? What we've really done is basically take out last week's high here, and hang on, let me make it simple first. Within this range, I think we're just range bound really, so we can mark that as range high. So if we back, mark that out as our range high, and above here is where I'll probably look for longs, and I'll map out the scenarios. This short term probably a range low, and then within that we've got some sort of mid range we can work with, which is holding as a key pivot around here, okay, which is a Monday's high from, was it last week, week before, one of the mid ranges. So within this, I'll be splitting it up into here for level to level trading, and within here. So to keep it basic, all I'm looking for is a breakdown. So my clean invalidation would be obviously a clean break above here. So short term, okay, if I was not already on this train, I would wait for possibly a bounce, okay? And then if it was to make a clean break below, that's my short trigger, as clearing violation level there. Target wise, short-term target here, and then range lows to take out these lows. Does that make sense so far? I'm keeping it really, really basic. Sometimes there's no need to go on and on and on. So, bring in the levels, okay? The levels probably make it look more complicated, but here. So, what I'm looking for is possibly a little pump, okay? And then if it gets back below, or in the second half deviation, once it gets back below, sells off. Deviation, sell off. So that's my trigger plan towards here's first target. If it bounces, I'm going to close it. If it then smashes back below here, well, that's the second half, isn't it? See that? Resistance, support, support, support. From there towards there then. Possibly the top of this consolidation first, and then these lows here. So, ranges I'm looking at, there, and then second play is there. Does that make sense? Is everybody clear with that? So, as for the long scenarios, okay, I'm not willing to go long here. My higher time frame still suggests bearish. If it doesn't give me what I want, that doesn't, no trade then. So, the long scenarios, okay, if this is a possible higher low and it's consolidation to go up, clean break and hold above, and then once it gets back above that last week's high, that's going to be my trigger plan. Cut in a clean break back below whatever the swing low is, and I'm going to be targeting probably towards these lows as first target, and then secondary target down here. Target 1, target 2, and that is it. No, I just started. I'm not having an F here. Everybody clear with the plan? It's not as always bearish. It's what if you look at the monthly chart, what's it been doing? As always bearish. It must be hardcore long. So clean break a smash above, then that's probably going to be my long scenarios. Okay. Okay, if you don't understand my triggers, then you gotta watch the older videos. Okay, that's about it for Bitcoin. Nothing much to say. I mean, obviously, if this level breaks, this low here, then possibly, then I'll be looking for these lows. And if we look at it, from a simplistic point of view, I'll get rid of this little bitch. No need to cry. It still looks like a correction to me. If I look at it from this sort of price action, okay, there's nothing yet to really suggest. No structure has been really reclaimed to say we're bullish. Okay, short term, but after a big sell-off, correction, like this. So these kind of moves, okay, until proven otherwise. Okay, let's go on to Ethereum now. I was wrong on the idea here, which we went over and had to cut it, but I think I was probably a bit too excited, but regardless, risk was in. So bigger picture, let's look at Ethereum, similar to Bitcoin. Go to the monthly. And similar to Bitcoin, I would anticipate range lows to be taken first. So before higher prices. So we got range high and these lows. So to me, it makes sense. Take out these and then play back towards the range. However deep it is, I don't know. But my definition, clean break and hold above or below, whichever it is, that's it. Not like this. Clean break, something like this. Sustains the move, starts breaking down. That for me is a clean break. I have gone over it in previous videos. So I think it's still range bound. Monthly still suggests lower prices towards here, and then we'll see what happens. So go to the weekly now. Same with Bitcoin. Okay, doing a bit of a correction. As to what point do I think, okay, maybe the low is in. Okay. Yeah, probably above here. I mean, see previously, once it got above this area here, then we pushed up. Once it gets back above here, or if it does, then I'll probably say, okay, you know what? Probably going to push higher, at least back deeper within the range, possibly towards here or these lows. The lower time frame would make more sense. Go to the daily, and similar to Bitcoin, okay, we're retesting resistance now, aren't we? So the support area that's capping the downside, it's here. So split into ranges. The upside is being capped around here. Okay, so is it really bullish? Not really. If you want to know clean break, watch previous videos. There's about 4 people asking me. Clean break, for example, say, what do I consider as a clean break here? So this is resistance. So it makes a clean break there. That would be a clean break. So breaks above or holds above, that would be a clean break. If it breaks above and then deviates, that's not a clean break. That's a deviation. That's it. So if I look at that, this still suggests lower prices to me. Okay, till proven otherwise. So if for whatever reason I don't like the shorting here, or I'm confused, or markets could, if I'm in two minds, or if it makes a break below and a sustained hold, clean break, i.e., then I could play that range as a worst case scenario. That's always there for me. Unless it can't one candle nukes, then I can't do much. But that's always there for me. That's the breakout play I'm playing, and that's a deviation then, isn't it, of this? So current prices, what do we do here? Let's add in the levels, okay? And this is from before. I'm also going to add in, well, this is key low from before, isn't it? The question is, how deep does it go? If I am looking for downside, oops, daisy. There we go. There. So that's the SR level. I mean, we can also pull in this level as well. That's the question. I mean, in a downtrend, or in a trending market, okay? We could get prices like this. So, for example, say, how does market move in trending? This is why, sometimes we wait for the ideal scenario to pull back, but we don't get it. So, for example, say, trending market upwards, like that. We don't always get the pullback towards here. Like that. Isn't it? Without getting the pullback. Same with the downtrend. So we don't necessarily have to do that. So what I do is I'll wait. So for example, I got a key level here, got a key level there, I got a key level there. I'll wait for whichever level gives me that breakdown from, and then I'll suggest or say that, okay, that's the level. So if I look at this right now, go to the lower time frame. I was waiting, and we haven't really got a breakdown yet. So it's pivoting off of here. But it hasn't suggested to me, it's really going down just yet. Based on what Bitcoin's doing, okay. So if I was to aggressively have shorted this here, well, this is the consolidation key level. This would have been, based on invalidation, a short for me. It's pulled down. Now this is just testing support now, so it's stuck here. So what I want market to tell me is, prove to me that this level's holding. So this would be an example. Could it rip this high again? Could it make a lower high? I don't care. But if it breaks down below here, then that's a deviation. And then that would be my shorting opportunity towards these lows here as target 1. And then these lows, and then here. Let's make this more simple and mark it out like this. So this would make it easier to see. You got a key SR flip there. Is this resistance become support? Higher time frame suggests to me, okay, I'm leaning lower, but, and I'll mark this out, okay? So above here, I'm looking for higher prices. What would be my objectives? So let's mark out the objectives as well, okay? Probably around here, okay? So these are the ranges I'm working. Within this area, I'm not sure. So it's simple, and this is where you can make it really, really simple. It's key level. Let it do its thing. If it makes a clean break below, then I've got my targets in mind. So there. So mark objectives. Oh, what's my mouse doing? Sorry. I'm not sure what's going on. There. There. And then that's my targets. So if it breaks down, that'll be my short trigger. Target 1, trendline break, deviation confirmed, target 2, and possibly target 3. And that's it. If I'm wrong, okay, well, I'm not really confident, okay, but if it does, draw it again. Sorry, my pen tool's fucking up today, so you're gonna have to bear with me. Doing his own thing. Here, if it reclaims back above here and holds, clean break, then that's my long. That's telling me market wants to push higher. Could be a long-term low, I don't know, but I'll just play level to level without having to worry about that. Oops, and I'll just play it level to level. So this way, Okay, whatever market wants to do, it's suggesting higher, and that's my target there. And then extended targets, well, if it's really going to go for it there, and then I'll have to reassess and maybe adjust my higher time frame plan. Does that make sense? Do I sound refreshed? Yeah, I think I wasn't feeling well the other stream. I got a weak immune system, so I get colds and stuff really quick. That's why. So anyway, is everybody clear? Well, also, I'm thinking lower prices is when I spoke about ES, okay? I still think lower until proven otherwise. A bigger picture, I think we overdue a correction, and we're at that point where they all can confirm. Everybody can draw trend lines however you want to draw it, but it's just pretty clear to see that we've got some sort of breakdown, right? However you draw the trend line, doesn't really matter. I'm just showing you an example of the breakdown. So based on this, I think if I'm correct on lower prices on this, then crypto will probably fall as well. So, and David will come on to explain the FA of it. I think he's bearish this. But I will also use this for confluence as to switching my bias as well. So we're into this key resistance area here. So it's overall, at the same time, Bitcoin's coming off, Ethereum's coming off. This area here, it doesn't have to be perfect, okay? It doesn't have to be perfect, but it's around this region here. So if you want to just mark it as one level, just to make it easy to see, just here. But just keep in mind that I've got the region marked out. Yeah, fuck this tool. Let's do my heading. There, okay? So we got all of them coming off resistance. So if we were to, well, normally you're gonna get a pullback, right? It's not gonna go, but if we were to do this, then I'm very bullish ES and probably go back towards new highs. And then if Bitcoin reclaims the key level I mentioned and Ethereum, then that will all line up. Okay, so I always look at this, for confluence purposes. But for now, I'm seeing this as a pullback. So I'm happy to play level to level like this, and then say my lower end target is around here. So if I don't like this, okay, I am short. I'll cut it on a reclaim back above here. I'm looking for a target here, maybe a bounce, but then if it reclaims back below here, then that's a deviation. That's my short trigger plan towards there. So this is key resistance now, make or break. As long as we don't make a clean smash above here, I would think lower prices. Ideally, even if it is going to go high, I would like some sort of pullback and then take it from there. And then that would get me very, very bearish equities and Bitcoin bullish as well. Is that clear? Everybody clear with the plan? Yes, I do pay taxes. What do you think it is? That's about it for now. David, you about? One second, let me just sort this out. So is everybody clear with the plan? Should be straightforward. Sometimes I don't need the long explanations. It's pretty much more or less the same things I've been saying before. I think I made you present. Sometimes trade in the 1 minute. It's not just specific. It depends. Hello, David? I don't think I can hear. Oh, your mic's on mute.
Hello, mate.
Oh, there you are.
So, there we go.
Everybody,
Are we all good?
say hi to David. Can everybody hear him? Just to confirm. You guys know who he is. Support him on in January. Every time he comes up, market sells off. But no, in all seriousness, he's here to explain the FA behind things and share his views. So, I think they can hear you.
Yeah, no worries. Alright, guys. Yeah, I'm just trying to get the comments up in case anyone's saying anything. Let me just mute this. There we go. Alright, guys. How's it going? Can you all see my screen? Charts, yeah? Cool. Alright. Well, let's start by having a look at Bitcoin and more of the risk assets, so equity indices, Bitcoin, and then move on to some of the more fundamental stuff in terms of, what the broader economy is saying and where we're kind of headed and what I think we're going to be facing over the next couple of weeks. So on Bitcoin, firstly, and this is the same actually across all risk assets at the moment. We've seen this week. So on Bitcoin specifically, we've seen this kind of flaggy chart pattern print, right? But it's on decline in volume. And that's a bit of a concern, I'd say, purely because it's not really showing much buying intent. And we've seen the same kind of pattern play out throughout this whole down move. So we've seen it like here, for example. You see that, let me get the right trend on. You see that the market just kind of trades back up into a level. It doesn't even hit it here, but it's trying to test to the upside. You see it again here, misses it again. So all along here, there's been no real buying intention. And it's kind of similar. So essentially what I'm trying to say is that if a price is traded before a key level, it's going to trade there again. So it's likely that we are going to flush through here. Okay. What it does here, I don't know. That depends on, how things start happening in terms of, where yields go, what risk sentiment is looking like generally, and I'm going to get onto that in a little bit. But right now, that's the way that I see it. And right now, the market is very, very technical and flow driven, in my view. So, the only notable thing this week is that we have NFP on Friday, and it's expected to be a massive miss. The White House has even been mentioning that, the jobs report is going to be poor because of Omicron and people, being out of work, off sick and stuff. But I only think that's part of the picture. I think there's long-standing structural issues there. And I actually tweeted President Biden today saying that his employment data was totally bullshit because he's not factoring in the participation rate. I can show you that quickly, actually. So basically, what I was alluding to was that he was saying, oh yeah, American job growth was fantastic in 2021. But I was saying that 2.37% of people took themselves out of the workforce. So it's like a totally fucking bullshit statistic, right? That you can see it there, 2.37%. So that's the margin of people that aren't in the workforce. So you're seeing all of this nonsense about like, fantastic fucking employment data and all of this, but it's just bollocks basically. So yeah, one of my big things as well is if it's traded there before, it will trade there again. Look, again, we've got a miss of the key level, the key prior level, the broken level. So again, no buying intention. So if you want to take a probabilistic bet, and this is all we should really take from it, is where is the market most likely to go? And it's most likely to go and touch this low, right? But getting away from Bitcoin just for a second, we've seen something similar on the ES, so the S&P 500 E-mini contract, where we've seen decline in volume over these last couple of days, with price obviously extending higher. Now, this is absolutely a short squeeze, and I think the max pain on the ES right now is right about here. And the reason for that is because if you look at a longer term moving average, there's a lot of people that are going to be flipping between that. CTAs, for example, they're very systematic, and they might have taken some short profit off the break below the moving average and then bought back systematically. They don't really care. They don't really care about other things such as, the fundamentals and whatnot. So they might have just bought back here. But if that starts ticking back lower to the moving average here, then you could see a bit of a flush through. This rally, I think, is really positioning led. Okay, so what I mean by that is all you're seeing is covering. You're seeing a lot of covering. There's nothing to indicate to me that we should see anything sustain higher necessarily here. Okay, and the reason because of that is really down to the data that is coming out and what people are planning for over the next couple of weeks. We're planning for coming into March for the Fed to hike. This is amidst poor data coming out. So we've really got to focus on that. And TraderSZ actually mentioned something to me earlier today, and I was like, no, I don't think that matters. But tomorrow we've got the ECB coming out, and the Eurozone has just had the highest inflation print since I can't even remember when, for many years basically. And this is their one chance to pivot to a more hawkish stance, so looking to raise rates, right? Now, what this could mean is that if we're getting, coordinated rate rises globally, it means that liquidity starts to get a bit tighter. We don't have this loose policy that we had back in March 2020, for example. And so this could be actually quite significant, because it's not only just to do with European rates, but it's showing that central banks now are happy to pivot from their traditionally dovish stance, which the ECB is. They've got a negative rates basically. And so, if there is a slight pivot here, especially from this meeting tomorrow, the Bank of England are meeting tomorrow as well, actually, then, it does indicate that there's more liquidity withdrawal globally, not just in, the US, not just in certain economies. Now, something interesting to note here it was on the NQ. I'll go to the NQ, so that's the NASDAQ E-mini, is that you tend to find that you need 3 consecutive days of bullish upticks. Well, I say bullish upticks. You need 3 consecutive days of upticks that are 80% bullish, basically. So 80% of pure upticks, right? And we got that from Monday and Tuesday. But today we've kind of failed. We failed there at getting those 80% upticks. And so it's very, very interesting to see now what happens later on tonight, overnight, and tomorrow with the Bank of England and the ECB meeting. If there's any sign of hawkishness in this kind of global coordinated tightening, then that could be pretty dangerous for risk assets. Because what you have to remember with how central banks operate, right, is that it's kind of like game theory. I'm sure loads of you know about game theory and the prisoner's dilemma specifically. Okay, so what you've got to factor in with central banking and how interest rates move, quantitative easing, all of this stuff, is that if one's moving, then others are going to move. Now, it doesn't necessarily matter about the emerging market economies. Okay, they've been hiking rates considerably, like Brazil, for example. They've been doing it all last year. It doesn't necessarily matter about them. They're more kind of flexible and they can do that. But they can, show a way to the developed economies to then go and do it. And so if we start seeing consecutive and coordinated hikes and tightening, that's not good for equities. I mean, it would be good for some sectors, like certain value stocks that are kind of sensitive to higher yields, for example, which you might expect with higher interest rates, not necessarily though, because we've got the QE side of things to consider as well. Sometimes when they taper, actually yields drop, which many people don't actually factor in. But when it comes to coordinated central bank activity, the Fed are obviously one that people focus on heavily, because obviously you've got the dollar as the reserve currency of the world. But they kind of are forced to move in consecutive and coordinated fashion. So definitely something to watch tomorrow, and something that I kind of, until TraderSZ mentioned it and I had an actual think about it, I was like, no, that does actually make a lot of sense, because it's purely the relative pivot, not the amount that they might hike or, but whether they actually have the intent to do it and whether that intent is valid or not. Now, the only problem with that is, and I mentioned we come to the data, is that Germany had negative growth in the last quarter. Okay, so if Germany get another quarter of growth, then of negative growth, then Germany is in a recession. Okay, so that's something else that the ECB has to be watching for. So they might be in a bit of a pickle here, but their main concern might be inflation rather than worrying about German growth. But globally at the moment, we've got pretty poor manufacturing data coming out as well. Australia, we had a print of 48.6, which is a contraction. Where else? We've basically seen decline in manufacturing data all over the place. So that's a bit of an issue. And one thing that we can point to here as well is this chart, is the 2s 10s spread. Okay, so basically this is just showing you how the yield curve is behaving. Okay, so you'll see here when it's likely that rates can rise in the future. The yield curve steepens. That's positive, positive for growth. When it's less likely that rates can rise, you start seeing the curve flattening. And so this is what we've been seeing since early last year. So the end of March last year. So we started, that is the worst fucking line I've ever drawn. We started seeing the yield curve flatten. Okay. Now, when the yield curve flattens like that, you tend to find that people start to become a bit stressed. Yeah. People start to want to take risk off and stuff like that. Now, when you get to here, that's what's known as an inverted yield curve. And that's massively recessionary. Okay. It pretty much predicts, recessions all the time. You can see here, September 2019, it inverted. We had a recession based off of the coronavirus. What the fuck? That doesn't make sense. 2007, recession. 2001, recession. Now, I know what you're going to say is that this is all coordinated or whatever. And the coronavirus was coordinated. But, here, another recession in the early 90s. So the yield curve is a very good predictor of recession. And it seems like with data going that way, and even PayPal said it today, it's why they're off so much. PayPal stock's off what, 25-30%? I haven't checked it recently, but that's the last time I checked it. They said that the demand's going to slip, and so they obviously expect less transactions to occur, so less revenue, right? So we're hearing all of these different signals, and the problem right now with earnings coming out is that all firms are reporting Q4 earnings, and they're fantastic. Google smashed it, Microsoft smashed it, pretty much every firm has smashed it. Now they have a massive hurdle to contend with going forward, and the way that markets price things in are based on whether they can actually get over that hurdle or not. And so because the hurdle is now so high, if they get in line, that's negative for the stock. If they miss, that's even more negative for the stock. Okay, so these are the things now we have to start watching for, is that we have to be looking more. Oh, hang on. Jim Bianco's been talking about the yield curve inverting for a month and a half. Yeah, Jim Bianco's good. You can always look at the yield curve inverting. It's heading there. It's not inverted yet. But it's one thing just kind of saying it, and the other thing acting on it. Does he have a trade on? Has he got a flattener on? I don't know. A flattener would be where you're long the long end and short the front end of the curve. So you'd be short 2-year bonds and long say 10 or 30-year bonds or something like that. So that, if he's got that on, fantastic. If he doesn't, then it's just a twat. But if we go as well onto the dollar, you might notice something interesting here. So let me see can you see this chart as well? No, you can't. All right, one sec. Let me just copy this. Right. So let me just get this up. So I made this chart for Macrodesiac to show nicely the way in which I tend to look at the dollar's behavior. And where I think we are now is here, okay? And I don't necessarily think that global growth has a rocket up its arse. That's probably the wrong thing to say. What I think at the moment is that global growth is becoming, has a smaller spread to US growth, okay? So what I mean by that is US growth is basically kind of compressing a little bit relative to global growth, okay? So under these conditions, you tend to find the dollar's weaker. And I've been saying that the dollar would weaken specifically versus dollar yen and the euro. And that is what we've been seeing over the last couple of weeks or so. Well, I say the last couple of weeks, last week or so, we started seeing the euro rally, get back into the middle of this range. And that's the way that I'm looking at this going forward. But in the short term, I think that what we're going to find, if we go back to the ES, what I think we're going to find is, and let me go out a little bit. Let me go to 2-hour chart. Delete all this shit off. So if I take it to here, okay, this is a key level for me. Absolutely. Definitely a key level based on those things that I've said. It would be very, very interesting to see, you know, where we do end up the week. As I mentioned, I think max pain is at about 44.30, which should be right here. So max pain's there, okay. And I just really, really can't see it getting massively higher. There's nothing indicating to me that we should, you know, just have a real massive slip up to all-time highs. But the way that I think this is going to play out is that everyone is focused on March, barring maybe, you know, a Ukraine invasion. I think what's going to happen is that we're literally just going to be going like this. We're going to be going like this for a while. Not this long, perhaps, but up until March. If we were to put that onto a shorter time frame, let's do that just so we're not confused. I just think we're going to be just going sideways for a little while, just like this. It'd be nice to trade if you're a technical trader, and it would be nice to trade if you're just looking at flow. But that's the way that I see it going. We could attack down lower again, of course. You know, there's some nice technical level there, for example, just to have a look at. But yeah, that's the picture that I see. So it's not the most interesting at the moment. It's actually pretty difficult to trade, to be honest. But I still do like the trade idea of short Russell, long Nasdaq as well. So taking that pairs trade and being able to use that, because I just see that value stocks are going to get hit the most again. Absolutely. TraderSZ?
Yep. Sorry.
You got anything to ask?
No, I mean, does you guys have anything? Is there
Yeah, get some questions from the guys.
I think David's explaining the whole thing. I mean, I think everybody wants to know where's Bitcoin going, really.
Let's go back to Bitcoin.
Yeah.
Let's go on to the Binance one. No, the way that I'm seeing it is exactly how I laid out. You know, there's no point in trying to fight this trend at the moment, I don't think. The best buying opportunities in these conditions, in these macro conditions. So let me frame it by that. I'm looking at it from a perspective of, okay, what is the most likely look? You know, Bitcoin going all the way up here is fantastic, but that's not prudent to actually just go and say, you know, I don't think that it's going to do that, and it hasn't shown that it's going to do that. You know, there's no point in saying something just to sound, you know, all bearish and all bullish and fun. It doesn't make any sense. What the fuck is going on? Sorry, 1 second. I don't know why it's that probably. So yeah, I mean that's the way that I'm looking at things. It's that, look, you've got clear pattern here going on with each leg down. You just kind of fuck about here, you know. And I mentioned to you as well that whenever I see something like this happening, this is probably a good time to mention this. Where was it? It was where a level gets exactly touched and rejected.
Yeah, that was the other day, wasn't it? I can't remember.
Yeah.
It's hard to see on
Was it on the? Sorry, did you say
it was on a lower time frame, I think.
on the daily?
I think it was on like a
was it?
15
Okay.
minute. It was like a day trade type of setup.
Oh, okay. Let me just double check. Because that was a perfect example of some of the things that I look for.
I can't remember exactly.
Okay, so let's just take this for example, this level here. So this works well a lot in, funny enough, in the euro when it's downtrending. So let's say the market were to come up to there, okay, and if it touches there, this spike down and literally rejects to the tick or within, you know, 1 to 5 ticks, you tend to find that when it breaks the next low, and you can see something similar happening here, you know, you have a deep low and then it bounces off. So if it comes back down to here, you'll tend to find it will do the same thing. It will break through, take it by 1 to 5 ticks, and then push back down again. Especially under these conditions where volume on the upside's declining. And so, yeah, that's just the way that I'm looking at Bitcoin right now. I've got positions in CAD yen. I've got positions in TLT, which is the long bond, which is going absolutely fucking nowhere. And right now that's kind of just a sign of the market. It's not doing much. It's not actually that exciting. It shouldn't really be exciting, but that's the way that I see it. It's just going sideways. And I think, the market's just poised for, for March, really.
Happy days.
David, do you see any scenarios where ES and BTC are counter correlated? So negative correlation, I mean, yeah, we've had that. So if we go to the ES, just shove it on there. We go to correlation coefficient. Oh, fuck. One sec. Let me do it with BTC USD. There we go. Apply. Might need a longer time frame on there. Sorry, bear with me. So if you go 50, say 50 periods, you can see that there are periods where it's decorrelated. Absolutely. So if we add on BTC USDT, so what happened in May 21? We had obviously the big sell-off, didn't we? And then a retest of the highs. So, this was largely kind of a Bitcoin specific move, if I recall, because obviously you can see the ES still rallying up. Sometimes you do. Sometimes it's kind of idiosyncratic moves. It's idiosyncratic moves in crypto that aren't necessarily related always to the overall market. But one thing that I said the other day was that I was asking for a good liquidity indicator, and someone said Bitcoin, and I was like, that's not actually that dumb a shout, because if you consider how sort of high beta it is, how high risk it is, it outperforms the S&P, for example, so it's got really high beta. It could actually be quite a good indicator for liquidity. And I did show the Euro-Dollars future contract as well up against Bitcoin. So if we go here and we look at when, and if we hide that, and if we look at when the market started to price in rate hikes, which was really, end of 2021, had this little move here, I guess. But it was really end of 2021 here, you started seeing Bitcoin really move down heavily. So it was kind of correlated with the pricing in of hikes. We haven't necessarily seen that with stocks yet. We've seen a bit of turbulence. But, a rate hike involves tightening. Well, it is tightening. So you get, less liquidity, basically. So it's not actually that dumb an indicator for liquidity. And at the end of the day, liquidity is all that matters in the market. That's how markets move. That's how markets shit themselves, and that's how markets don't move. All down to that. Where was that other question? I care about geopolitical events. You have to care about geopolitical events. It's difficult to time and know what's going to happen, but you've got to be aware about. You've got to be aware of them. So you kind of know what assets might be more at risk, what assets aren't at risk. So oil at the moment, for example, could be at risk because of Ukraine, Russia. Russia is one of the largest exporters of oil. You've also got sanctions that the US might put onto Russia. So oil, could be under threat as it happens with most wars. When they kick off, supply gets constrained, so oil price shoots up. That would be just absolutely the worst situation to happen for inflation. I don't even know what the fuck the Fed would do then. Would shit themselves, clap or something. David, go over everything happening in March. Yeah, the Fed are just going to announce that they're hiking, whether it's 25 or 50 basis points. So 0.25% or 0.5%. We're not sure yet. Could be as high as 50 basis points. Just honestly don't know just yet. My personal thinking is that the Fed don't really care about data that much. They just want to get away from 0% interest rates as quickly as possible, so that they've got more space for when the market turns down next, because the Feds are going to be very, very aware of this. They're going to be very, very aware of this level. So I wouldn't be surprised if they just keep hiking until we actually get down here. Then that'll be the time to buy again. Buy stocks. Do you think the Fed, I think I just answered that, if I think the Fed will backtrack hikes, don't think so. Bit more on the idea behind short Russell, long NASDAQ. Yeah, so if the way that a lot of the Russell firms are set up now is that they're kind of zombie companies, like they've issued a shitload of debt and they aren't actually making any money. So if interest rates go up, it just makes their debt load heavier. Versus the NASDAQ firms, where their future cash flows will just be affected a little bit, and they will be repriced, but not as much if you consider the concentration of the NASDAQ being like Google, Facebook, or Meta, or whatever the fuck it is. What else? Amazon, Apple. The NASDAQ is mainly dominated by those, whereas the Russell is dominated by loads of small firms. So I'm just playing big firms versus little firms, basically. Do you think Apple would be a nail in the coffin of NQG to its weight if it misses Q1 earnings? No, I think Apple is basically a blue chip sovereign bond. So, people are buying Apple in replacement of getting any yield on treasuries, for example. So that's what I think of Apple. Same as kind of with Amazon, massive monopoly. Massive reach, and it's a place where pension funds even now consider to be their primary destination. I mean, the Swiss National Bank, 6% of their portfolio, their US equities portfolio, is in Apple. So that just shows almost how it's like a high quality liquid asset, even though it's not, because it's not gilt edged. But that's kind of the way that you can consider Apple. When you say less than 1%, when you say less than 1%, is that enough to pull liquidity out to crash markets? It's basically the perception. Actually, this is something else that I need to show you. It's basically the perception. That's all the market is really doing with the macro side of things. It's all perception. So it will be leading up to it. When it's confirmed, you get a release. And then you get a rebuilding of perception. So that's the best way to think of macro. And, when people are talking about macro, when I watch them, they're talking about, oh, if this data point is X, Y, Z, and if that data point's this, and it's like, well, yeah, I get that. It's important at the time on the day, but for the overall picture, you're pricing in expectations. That's all you're doing. Okay, so let me show you credit spreads quickly. Here we go. So this is also a key thing as well. So currently, that's actually the wrong one. With the high yield. So this is definitely something to watch too. If credit spreads start creeping up, then that will be danger for equities. You're basically looking here at the difference between investment grade credit and credit yields and high yields, high yield graded debt, basically, and the yields on them. So, it's called junk. And so if this starts ticking up again, then that's a real issue, because these firms have obviously taken on a shitload of debt here. If that starts getting repriced, then investors will start demanding more for their ownership of said bonds, and it will basically put the companies in a really, really big mess. So that's also something to keep on the radar. And if you want to look at an ETF that tracks high yield corporate credit, you can look here, and this is the situation now. So let me just put it onto here. You can see that we've just broken through a low, which, well, we're way past the 2021 prices, but if this test here starts coming down, then we're in a bit of a shit. And also you can track this again versus, say, GE1, which is the euro-dollar contract. And you can see that it's very correlated to interest rates as well. So that's something to pay attention to. And sorry, just to be clear with G1, I might invert this actually, because then it will be a lot clearer. So this is showing actually the rate rise. Okay, so you price it you do 100 and then minus the price here. So this current price is showing 50 basis point hike. Okay, so you do 100 and then just find the difference between here and there. So yeah. Gold, I have no thoughts on, because I think it's a pile of shiny shit.
I think we'll take on one last question, David, and then do you want to show what you're about with the macrodesiac stuff? Because a few people have been asking if you wanted further stuff.
Yeah, sweet.
So,
one last question. Do I use order flow? I do. Yeah. I'm not really a day trader though. I'm shit at day trading, so I try to steer clear of it. And it doesn't necessarily make sense to just look at order flow if you're not day trading, apart from at key levels to see what buyers are doing. But you tend to be able to see that from how the candles or bars are set up anyway. ES liquidity data. Okay, that could be quite interesting to show. Right, this is the last question, but this one is quite important. So you can go to here. You can go to the CME site, and you can type in, how much does it cost to do 100 lots of ES, for example. And you can change it, say, let's go back to 2021. So a year ago, it was costing, what's that, like 2 ticks? Right now, it's costing 2.5, 3 ticks. So that's just showing you that it's a little bit more difficult to get filled. So there's less liquidity right now. But yeah, guys, if you want to have a look at macrodesiac, there's an offer right now. You can join forever. It's like 249 quid. It's fucking cheap as chips. And it's literally all macro. We like vet people that come into it as well. Just so that we've got, a really strong community. We do kind of put trade ideas in there. So, I put down what I'm looking at. But it's not like holding your hand or anything like that. It's really to show you the context of how to move from looking at a market in the macro sense to then being able to action something. So it's not like buy here, sell here, here's your fucking stop loss and stuff like that. I think the euro will do well under these conditions, and here's why. And yeah, we do look at things much longer term. But yeah, if you are interested in macro, then more than happy to have you guys join us. I think TraderSZ's put a link for that with the discount in the description or somewhere.
We'll post it on the tweet. Once we.
Yeah, that's it. Yeah.
That's right. So if anybody's got questions, they're okay to DM you and stuff. Yeah.
Yeah. Just ping me on Twitter. It's @DavidBell_. And yeah, we've got a YouTube now, which we're starting to do more regularly too, which is macrodesiac. So have a look at that.
Well, thank you very much again for coming on, David. Everybody give David a follow.
Always.
Definitely bring you on soon again. So everybody, thanks for tuning in. Thanks to our sponsor, Prime XBT, for making this happen. Check the link in the description. If you like what you see, use the code TraderSZ. Catch you guys next week. Bye-bye.